Hey, welcome to the February market forecast for 2020, and it's Nathaniel Lee, and it's from Streetwise Education. Now, couple things before we start. Legal disclaimer, please read this. This is general nature only, it's not intended for any investment advice. So do seek independent professional investment advice before you take any decisions, okay? So just be mindful of that. And this is not the first time, so please do read it. For those who haven't seen this, do read it before you proceed. Very important. Now, what I'm going to look at is the market indices for the S&P200, the Australian one, Standard & Poor's 500 for US, and Bitcoins. So, because it's a big, there's a lot of people talking about it. And if you knew where the market is going, you want to look at the Bitcoins. So, first thing first. So as you can see, this is the Standard & Poor's 200 for the ASX. It's the weekly chart. Now, for February, I would say that the market will be moving up a little bit more. So there's only like 2 more weeks left. Now, my biggest concern as it is the market since last March has dropped quite significantly. So we're talking about good, 40%. But they rally quite heavily because of the stimulus packages. Doesn't matter whether it's Australia, around the world has a lot of stimulus and a lot of cash. So that's why the market gone up quite significantly. Now, looking forward for the next couple of months, I would say that if we don't clear the 7,200 points, as you can see, this point quite significant because that was the highest points that the Australian 200 actually got to. If it doesn't clear that in the next couple of months, I will see the market will drop. Okay, so even though the market's trending up, but it's not that strong. So if I go to the next one, this is the daily charts, the Standard & Poor's 200. You can see that the market's been sort of flattening out since November. So moving sideways quite, still moving up, but sideways, so haven't really shown a lot of upward strength as such, like this one since November, this nice run up, it hasn't shown that. So I am concerned, and I do see that if we don't clear this point, we could go down a little bit. So there will be some sort of pullback. So just be mindful of it, and also manage your risk accordingly. I mean, the market, is very different now. You can't just rely on the traditional methodologies. You need to be more agile. So just be mindful of that, and also use your risk management. Really, do need to take care of your own money. Got to learn how to do this stuff by yourself. I mean, at the end of the day, who's going to look after your money apart from you? So simple as that. Now, I want to show you another chart. This is from a forecast from tradingeconomies.com. So they did a forecast based on the statistical data. And this is their graph. As you can see, the market dropped in March and the rally up. And they're forecasting that the market will not even go beyond 7,000 points, and we will start moving sideways and start trending down for the next couple of months the next year. So this cannot happen, depends on the recovery, depends on the vaccine rollout. I hope that everyone has seen the YouTube video that I produced on market forecast and market condition thing is all BS. I talk about those things, so have a look at it. Really depends on what's happening with the stimulus packages, especially fiscal and monetary policy, the geopolitics, and also the pandemic. So how quickly will we recover? How quickly is the rollout, and people can get back to business? And I have to say once more, the 5-day lockdown in Melbourne really caused a lot of pain for a lot of business, because it wasn't forecasted. It's Chinese New Year, Valentine's Day on the weekend. That's the biggest time for actually recoup some of the losses last year. So that really did affect the market, especially when you lock down, can't go anywhere. So again, it really depends on those things. If we get locked down again we'll drag everyone's down. So that could be interesting. So, this is just a forecast. At the end of the day, they all BS anyway, until the market is doing what it's supposed to. Okay, so let's move to the next one. Now, this is the Australian dollars and US dollar, because I want to look at those two. Now, with all these stimulus packages, you can see that the US dollar actually dropped quite significantly, and Australian dollar too. So we've actually come back up quite a bit. So last time the Australian dollar was this high was back in 2017. So it's quite significant. If we can punch for this 82 cents, Australian dollar is going to rally higher. And a couple of things. High Australian dollars are not good for export, but great for import, so that's a good thing. But for the exporter, it's actually going to be painful for them. So just be mindful of those things. Well, dollar and all that stuff maybe get replaced by digital currency, cryptocurrency. So who knows how long we're going to have this stuff going on. But, it still remain to be seen. But look at the charts, it's been quite significant since the market collapse in March. Aussie dollar had rallied quite strongly. So if we can clear this 77 points somewhere here, this double top, then we can go higher. But got to see what's going on. Now let's look at the S&P 500. I'm stopped doing the Dow Jones index for a simple reason. Dow Jones only cover the top 30 stocks. If you really want to look at the market for US, you do need to look at the S&P 500. And the first one I have for you is the daily chart. As you can see, very similar to the Australian market. But one big thing is that, as you can see, the lines here that I drawn, as you can see, that was the high previously before the market collapsed due to the pandemic. But the Dow Jones, the S&P 500 actually rallied beyond it. It did do a couple of pullback, as you can see, but in September and November. Because of the November is the presidential election. So after that, the market did rally up. So, but how high it can go really depends on what's happening based on the policy in the US and the people, really. So, but if you just based on the trend, I would say that it can still go up to go beyond 40,000 points. I mean, that will be quite significant. It's not far from it, so it's possible. So let's look at another chart. Let's look at the weekly, and as you can see, the weekly trend is still going quite strong, so it could continue. And they did say that the US market will be quite strong, so coming out from it, especially they did have the stimulus package pass, so it could continue. But again, just play it by the ear. Now finally, I want to talk about Bitcoins. Bitcoins is a quite interesting thing. If you look at the charts, if you were smart and lucky, like a friend of mine who bought them back in, I think that was back in 2012, he was talking about buying Bitcoins, and was at the time was still very new, and he actually mortgaged his house and bought a whole bunch of Bitcoins. And last I heard that he's a multi-millionaire anyway for Bitcoins. So, but it's quite interesting. If you have a look at it, since 2019, it was still sitting at $3,000, so 3,600 something there, and then did a nice run up, and the market collapsed in 2020. But since then, Bitcoins really had run up. Look at this, and still this is February. At the end of the year, we'll do another recording and see where Bitcoin's going to be. But look at the trends. It's still going quite strong. There is some pullbacks, but beyond that, it's moving quite nicely forward. A lot of commentators and market gurus say that the Bitcoin can get to 100,000 by the end of the year. Who knows? But if you are interested in those things, just trade accordingly, do your research, talk to the professional advisor before you can touch it. Okay, because it's a whole different ballgame. Stock market do close. Bitcoins, the cryptocurrency, is 24/7. So it's quite challenging, and they do fluctuate quite a lot. Okay, so just be mindful of it. Anyway, have a look. We will get back into this again and talk more about Bitcoins as we go through the market forecast in the near future. So in March, we'll talk about the potential growth, Bitcoins and so forth. But again, play it by the ear. That's all I can say. Now again, bonus gift. Okay, it's Chinese New Year. As I said before, it's the year of ox. So let's celebrate this with a special offer. Now, I got a course called Getting Started in the Stock Market for Millennial Investors, and it's $129. It's a simple course. It's not too expensive for simple reason. I don't want to be charging people too much because it's not the whole purpose. I do trade and I do make quite a bit of money from it. I'm very happy with it. And this course is really for people who want to learn how to trade, okay, and invest. So it's only $129. I'm not charging more than that because it's just no point. Now, what I'm going to give you is a 40 minutes quarterly webinar that is going to be valued at 499. If you had to buy it separately from my website, it's actually that price. Stock market infographics is at value at 97. And bi-monthly macro market, this is when I talk about the macro markets with looking at monetary policies and also the fiscal policies. Videos usually valued at $5.99. I'm going to give all this to you. The total bonus is 1,195. You get it for 129 bucks. So, it's a special gift. So take it out. Don't forget to check it out. There's a link for this. So, go on to it and have a look. Check it out. It's a great course. I have over 500, people enroll in this course. So, if 500 people like it, you will definitely like it too. Now, don't forget to like, share, and subscribe.